We're diving straight into an analysis report today on iRobot, ticker IRBT. It's looking at that massive speculative run-up, which seems to be driven by, well, rumors of a White House intervention and some pretty explosive short squeeze dynamics.
Right, and it's expertly laid out. The hook, the setup, bull case, bear case. That structure is great for grabbing you, but it's also, I think, the first place we can really start our critique.
Okay, so the structure itself.
Yeah, the report's current structure, which immediately launches into the viral hook and the short squeeze setup, it prioritizes market volatility over establishing the core analytical premise.
So you're saying it's leading with the symptom, not the cause.
Exactly. I mean, the notes show that it spends a lot of time up front on the huge short interest. What is it, almost 40% of the float? And that, that wild 100% stock move. And it does all that before it really rigorously examines the rumor itself.
Which makes the whole analysis feel a bit reactive, doesn't it? Like the price movement is driving the story, rather than the fundamental question of, well, is the White House actually going to step in here?
Precisely. So the suggestion is to re-anchor the entire opening around a deep dive into this rumored Robotics Sovereignty Act. The report already makes a strong case for policy uncertainty, and that uncertainty, that should be the foundation.
But there's a trade-off there, right? You risk losing that viral hook. People clicked because of that crazy price action. How do you lead with policy and, not lose them?
Well, that's a difference between a news headline and a high-quality analysis report. The idea is to restructure the flow completely. So instead of starting with the rumor, you start with something like the White House policy question.
Okay.
First, you analyze the geopolitical context. I mean, why would they even do this? The whole competing with China angle? You build that case up.
So you establish the why before you detail the what happened to the stock.
You got it. You detail the likelihood and the scope of a potential boost to the U.S. robotics sector. And once you've built that solid foundation, then you can move all that short squeeze setup material, the short interest, the options activity later in the report.
Making it a supporting section?
Yes. You treat the squeeze as the result of the rumor, not the premise of the entire analysis.
That's a really sharp point. It immediately elevates the tone, suggesting the volatility is just a symptom of this much bigger policy question, which is really the core story.
Exactly. Okay, so moving on from that, I really liked how the report zeroed in on the stimulus mismatch. That was a great insight.
Right.
But we need to take it from just a strong observation to a truly quantified risk.
Okay, I'm following. The report flags the stimulus mismatch as a big bear case, but you're saying it's kind of undersupported right now. It feels more like a side note than a central pillar of the argument.
That's right, exactly. I mean, think about it. The distinction between industrial or manufacturing robots, which is, the likely target of any government policy about sovereignty, and consumer robots, like the Roomba, that's everything. That's the whole ballgame.
So if the government is trying to boost domestic manufacturing, a company that makes vacuum cleaners, it just seems completely misaligned with that goal.
And the report says the market may be misinterpreting the news, but it doesn't really give you the depth to understand just how severe that mismatch is.
So the bull case is left hanging on what? Just sentiment?
Pretty much. Which is why we need to elevate and expand that mismatch analysis. We have to really drill down into the financial and operational reality of that gap.
So how do we do that? What are some concrete ways to show the reader that this stimulus money would almost certainly be aimed at industrial applications?
Well, for starters, you could provide some data on the current investment landscape, show the U.S. government's historical funding. Where does the money usually go? Industrial automation or consumer tech R&D? I mean, my guess is it's heavy machinery, logistics, defense applications.
You establish a baseline for what a Robotics Sovereignty Act would actually look like.
Right. And then you apply that directly to iRobot. You can try to quantify their exposure, or lack of it, to the industrial sector. For instance, what percentage of their R&D or revenue is dedicated to manufacturing automation?
Even if that number is zero.
Especially if it's zero. Stating that explicitly has so much more analytical weight than just saying, oh, they make Roombas. It turns a suspicion into hard evidence.
In building on that, you could even look at the wording from past sovereignty or Made in America acts. Have consumer products ever been a part of these things?
Yes, absolutely. That lets the analysis shift from just, speculation to grounded probability. If past acts always excluded consumer tech, the burden of proof for iRobot getting included here becomes much, much higher.
Okay, excellent. So if that mismatch is the core vulnerability, then that brings us to the acquisition thesis, which feels like the only thing really holding up the bull case.
And that thesis needs some serious structural support. Right now, the bull case on iRobot as an acquisition target it's just too general. It lacks the strategic detail you'd need to overcome that huge bankruptcy risk.
Yeah, the material points out that the market cap is cheap, under 100 million, but it also highlights the massive debt, over 200 million, and that going concern warning.
Which is a huge red flag. So the connection between cheap and attractive acquisition isn't really established. I mean, why would a big tech giant or a defense contractor take on that much debt? Just because it's cheap?
The price is only part of the equation. There has to be a compelling non-monetary reason.
Exactly. They need a reason to walk into that debt mess instead of just, waiting for the bankruptcy auction.
Right.
So the suggestion here is to focus less on the low market cap and more on the proprietary, essential patents and the engineering talent that would actually align with this robotic sovereignty goal.
So we need to illuminate the specific strategic assets. Things like their SLM algorithms, their mapping tech, stuff that a defense contractor couldn't just easily build themselves.
Yes. Instead of just mentioning acquisition potential, you need to specify which parts of iRobot's patent portfolio are strategically irreplaceable. Name the asset that justifies taking on all that debt. You have to answer the question, is the juice worth the squeeze?
That's a strong way to build the bull case. But what about the counter-argument? I mean, the low market cap could also mean that the 200 million in debt is just too much of a risk, and that waiting for bankruptcy to buy the assets is the smarter play.
Analyzing that counter strategy would make the entire report so much stronger. If a smart buyer can just wait 6 months, let the company go under, and then pick up the patents for pennies on the dollar with no debt, why would they buy it now?
You have to address that asset stripping scenario head-on.
It shows a much deeper understanding of the risks. But okay, to make the acquisition thesis and the bull case more concrete, you could give a specific hypothetical.
Okay, like what?
Like, if the government is boosting R&D for domestic manufacturing, how could iRobot's engineering team pivot? From home mapping to, say, secure industrial logistics or remote maintenance bots.
You're framing them as an immediate, high-value target for a buyer who wants to capture those stimulus funds right away.
And that's what gives the acquisition thesis real credibility. It ties their non-monetary assets, the people, the patents, directly back to the macro-political reason this whole thing started.
That brings everything full circle. So to wrap this up, this is a strong report,